What is good, everyone? Welcome to the next lesson in the 1% mentorship. For this lesson, we are going to be covering draw on liquidity and conditions. You saw when I did that, the draw on liquidity and conditions. Okay, so I think that this, guys, is the most important lesson of them all because you can have all of the entry models I'm going to be giving you, right? So the continuation model, MEC model, PDI model, whatever it is. But if you do not have a draw on liquidity to be taking these entry models towards, then you're going to be absolutely cooked. Okay, because an entry model is literally nothing without having the correct draw on liquidity. So I'm going to show you today how to have the correct draw on liquidity, and it's very simple. It's literally just I'd say it's 5 steps. It's 5 total steps on how to find your draw on liquidity. Or 5 questions you have to be asking yourself, 2 steps really. And then I'm going to get into some examples. And this is just going to be daily bias as well, right? So it's basically just daily bias, but also lower time frame is your draw on liquidity as well, right? So the thing with conditions is you can find, your draw on liquidity on the higher time frame, and then using conditions as well, you can find your entry model and your internal liquidity pools on the lower time frame, right? And that's what we are aiming for. Because as traders, we want to be aligning the higher time frame with the lower time frame. If the higher time frame is telling us we want to go to previously high, right, that's where the daily candle is expanding towards. We want the lower time frame liquidity pools, internal little liquidity pools, to be telling us the same thing, and that we should be going towards that same buy side, right, or same sell side, whatever the daily candle is telling us. Okay, so that's going to be enough yapping for me. I'm going to get in now to the trading sauce, but just know that price is fractal. Okay, so just know that price is fractal, and this is going to work on all time frames. Okay, let's get into this. First up, first question: why does the market move? Okay, so this is the question that you have to be asking yourself. This is a question you have to be asking yourself: is why does the market move? There are 3 reasons the market moves. Okay, so number 1 is to rebalance inefficiencies. So what are inefficiencies? That is just going to be your fair value gaps. Okay, so when we have unmitigated, unbalanced fair value gaps in a range, right? This is basically like the MEC model, right? The MEC model is an example of why the market is moving. And why it's a valid draw on liquidity is an unmitigated gap. Well, price likes to rebalance these inefficiencies to get into fair value of the range, to get into these gaps, and this will send price further, right? For value gaps, you guys have probably all watched the ICT 2020 mentorship, or have watched our boot camp maybe on YouTube, so you already know what a fair value gap is. But basically, when price runs too far, we leave these gaps, and these gaps like to get traded back to then send price higher or send price lower. Okay. Now, number 2 is going to be rebalance equilibrium. A little bit similar to rebalancing fair value gaps and inefficiencies, but equilibrium is going to be something that is really, really helpful when we have a really large move, and you can have this very strong impulse leg. You can then draw out your swing low to your swing high, and then from here we have EQ of the range, right? So if we just look at it like this, it's a little bit simpler, right? What price likes to do is trade back towards equilibrium of this range if we are in bearish order flow, right? Why does price like to do this? Premium versus discount, right? So if we are going to be shorting the market, right, or let's just use a real life example, right? If you want to buy something at the store, right, you want to buy it when it's on discount, right? If you want to buy PB Premium, you don't want to buy it when it's at $100 a month. You want to get in on that yearly sale that we do when it's at $50 a month, right? So that's basically what discount is. And then premium, if we are so deep into so low in the range, we want to see price trade into premium. So premium is if you're bearish order flow. Discount is if you're in bullish order flow, okay? And then from here, this sends price lower, and this fills people at a better price range, right? And better RR, because here you have about a 1-to-1 R. You have a 1-to-1 R if you're at equilibrium in the range. The higher you go, you're going to get better RR. Higher you go, better RR. So that's what price likes to do, is give people literally better entries, okay, by sending price back to equilibrium. Now note that when I'm taking trades, I do not need price to literally be at equilibrium to take a trade. As long as price hits equilibrium and then trades back lower, I can still short. But just knowing that equilibrium got hit gives me that peace of mind that, and I don't need to wait then. But yeah, you can also do this to target equilibrium. This is a reason the market moves, to target equilibrium. Okay, so that's basically that. Enough yapping about equilibrium. Next up, we have seeking liquidity. Okay, so seeking liquidity is going to be your buy side liquidity. Is going to be your sell side liquidity. Right. This is just basically your draw on liquidity. Your draw on liquidity is going to be, you know, again, we went over this with like the MACD model, but for example, equal highs, equal lows, London highs, London lows, Asia highs, Asia lows, previous day high, previous day low, previous week high, previous week low, an unfilled daily gap, unfilled weekly gap, unfilled hourly, unfilled 15-minute, 5-minute, right? Those are all going to be draws on liquidities, and that's just your liquidity pools that you want to be paying attention to. Time-based liquidity, like let's say we have, that New York lunch hour highs, that sort of stuff, all things that you want to be paying attention to, okay? Next up, let's move on from here, okay? So that's why the market moves. We like to seek liquidity. We like to run stop losses. Now, there's one more thing that I just thought of, which is another reason the market moves, is it also can generate liquidity. So I'm just going to add this. Generate liquidity is something that the market likes to do. And it does this when we're in, and this is just like a consolidation type of thing. When you see price generating liquidity, you know, this is a stage that the market can be in, right? Where you see price generating trendline liquidity. What it's doing is it's waiting for price to hit a higher time frame key level. Okay, so it will do this. And let's say there's a higher time frame key level here, right? Maybe this is previous day high, maybe this is previous day low. And price will simply continue trading, slowly chopping up to this, and we'll leave the trendline liquidity until we hit that. And then we can get into number 3, which is going to be taking out liquidity. But this is a reason the market moves. Now, I don't want you guys to be really trading when we are generating liquidity. It's not good because we can run this, then we can run higher. There's always a chance for some sort of AMD to happen. But just knowing that the market is generating liquidity because we're going towards a key level and we haven't hit it yet is just something that you need to note. Or if we sometimes already have maybe hit a higher time frame key level, then price likes to generate liquidity or accumulate price, and then we have some sort of manipulation, then distribution. So yeah, I don't want to like confuse you guys too much because that's not like the point, I guess, of this lesson is to be talking so much about generation of liquidity. I want you guys to be more focused on where the market is going and why, okay? But yeah, let's move on. So how do you actually now find your draw on liquidity, okay? You've asked yourself these 3 questions. Why is the market currently moving? Like, why is it moving? And let's see, you figure it out. Now we have to figure out how to find your draw on liquidity. So are we delivering from sell side or buy side is the first question you have to ask yourself, okay? So when I'm looking at this chart here, we are delivering from sell side. Now, again, what does sell side liquidity look like? This can be really like a 15-minute intermediate low, hourly intermediate low, a previous day low, previous day Asia lows, right? Whatever sell side it is. Then are we respecting or disrespecting PDRAs? Okay, so if we have a bullish draw on liquidity, these things are happening. We are delivering from sell side liquidity. We are disrespecting bearish PDRAs, just bearish for value gaps, or maybe we have like an order block here, whatever. We're running through those. And then we are respecting bullish PDRAs. So this is your bullish for value gap. This is your bullish change state of delivery. And your draw on liquidity is then going to be higher. And what does that draw on liquidity look like, guys? Well, buy side, we went over all the draws on liquidity. So hopefully you wrote that down, okay? Yeah, so that's what's happening if you have a bullish draw on liquidity. Now, if you have a bearish draw on liquidity, what 3 things are happening? Well, we're going to be delivering from buy side. We are going to be disrespecting bullish for rally gaps. And we're going to be respecting bearish for rally gaps, right? Respecting bearish PDRAs, disrespecting bullish, and we're delivering from buy side. What do we do if we have a bullish draw on liquidity? Delivering from sell side, disrespecting bearish, respecting bullish. Now, again, this chart can also look like something like this. Right? What is happening here, most likely? Well, we are delivering from buy side, right? Now, this is like, again, very simple, but very similar. But delivering from buy side, we have this drawn liquidity here, right? And this is like some sort of like continuation model, right? Delivering from buy side, we have swept this high. We have an inversion, so we're disrespecting like a bullish for rally gap that we have here, most likely. And then we are going to respect a bearish for rally gap that we have here, and then send price lower. Okay. So this is what a bearish drawn liquidity looks like. This is what a bullish drawn liquidity looks like. Most likely your chart is going to look like this, but just be remembering these things and be asking yourself these things every single day when you're coming into the market. Ask yourself these 5 things. Why is the market moving? And then ask yourself, is it moving to rebalance in efficiency? Is it moving to rebalance equilibrium, or are we seeking liquidity? And then ask yourself, are we delivering from sell side or buy side? Are we respecting or disrespecting PDRs? Okay. This is how I find my drawn liquidity every day. This is how I find my daily bias every day. Okay. Let's now get into some examples. Before we even get into like the main examples, I do want to go over a little bit about this daily bias on this day. Okay. A couple of days ago. But it's like just a good example of conditions. And what a condition is going to be if-then statements, right? So I'm always then asking myself when I'm figuring out my daily bias if-then statements. If this happens, then I will do this. You always have to be giving yourself conditions, right? If we respect this bullish fair rally gap here, get lower time frame confirmation that price wants to go higher, then I will look for longs towards that buy side. If we disrespect this bullish fair rally gap, because we are doing then what? We are delivering from buy side, we are disrespecting PDRs, then we're most likely going to be respecting a bearish PDRA, then I will look for short to the sell side. But since we are bullish here, right, we have been respecting bullish, disrespecting bearish, disrespecting these bearish order blocks. What are we going to see price do? Respect this, then go back to this buy side, okay? And then on this day, you also always want to be leaning bullish. Or sorry, not always leaning bullish. Always leaning a certain way. There are some days where I'm completely neutral, rare. So you really always do want to be completely either leaning somewhere, or just neutral if it's like a very neutral day, but you should always usually be leaning somewhere. Okay. Now, what happens? We end up trading lower at open, respecting this fair value gap, and then longing the fuck out of that. Okay, so if we go to this day, actually, was this a 26? All right. There was a beautiful okay. How about we load up TradingView? All right, yeah, just chalk the whole fucking mentorship at this point. You guys aren't learning today. Okay, there we go. Oh my god. Sorry, guys. Let me pause my OBS. All right, so fix my TradingView and everything. So back on the charts here, right? We have this 15-minute intermediate low that is inside of this 4-hour PDRA, right? So the condition here, right, and my drawn liquidity is going to be dependent on whether or not we respect or disrespect this PDRA here, right? This is a very important gap. Why? Because this is the gap that ended up taking out previous day high, right? So for me to be bullish, I would need to see price respect this, see 10 a.m. open and be above this. If 10 a.m. opens and we are below this, then we can potentially see a short towards lower. But if we respect this during 10 a.m., right, and during opening price here, then I would want to see price trade higher. Now, to zoom in even further, right, to get even lower on time frames here, we can then scroll down to the 15-minute to get a more accurate entry. Whenever we're looking at higher time frame PDRAs, for example, like a 4-hour fair value gap, it's always good to be scrolling down to, for example, like the 15-minute, then even like the 5-minute, to get a more accurate entry to really see where price is truly going to bounce from. Because most likely it's not just going to be the second we hit this 4-hour gap. It's most likely if we have lower, like all the way over here, we have this 15-minute intermediate low right here, right? So that's going to be something that we can look to see price bounce from. We also have this unmitigated 15-minute gap right here as well. So 2 areas, right? And from here, we see price trade lower at open, tap into that, and then from here, we end up taking out this, and then we get a lower time frame confirmation that price wants to go higher in the form of this 1 minute bearish for rally gap. And this shit gets disrespected. Okay, so once this gap gets disrespected, then we can look to target these highs and then even all the way up until this buy side here, right? Being the draw on liquidity. So we see here, price ends up trading higher, and we end up eventually going towards that buy side liquidity. Now, let's say you missed this first entry, okay? On this day exactly, let's say you missed this entry, okay? Now, what you can focus on here is another condition. Why? Because at this time, we have swept out this high inside of a fair value gap, right? There's a very prominent liquidity pool, but I do believe that my draw on liquidity here is still higher. Why do I think my draw on liquidity is still higher? And this is actually a trade that I did end up taking, my draw on live stream. So my draw on liquidity was still higher here. Why? Because of everything that I went over, right, beforehand. The model on the higher time frame is simply telling us that we want to go higher. So now I need to see that same model then happen on the lower time frame, right? And this is now our condition, this bullish 5-minute gap. If this gets respected, then I'd want to see price trade towards this buy side, right? So we can see here that price ends up trading lower, respects this gap, and then we get a 1 minute lower time frame confirmation long here, right? Highest time frame in this leg is this inversion. We have this high to this low. There's no 2 minute, there's no 3 minute, there's a 1 minute only. So once this 1 minute gets inverted, we can then enter longs right here. If you miss this long down here, target up here. And there it is. Okay, so 2 entries for that. And that is all just off of conditions and setting yourself that bias and giving yourself if-then statements. I cannot emphasize it enough how important if-then statements are in your trading. All right, now let's get into a couple of examples on daily biases that I've sent out. I showed you how to find your actual draw on liquidity and entry model in the lower time frame, and that's something that you guys see every single day. But I'm going to get into a little bit how to find your bias, okay? Oh my god, this is pissing me off, and I'm going to pause this video again until I fix this shit. Hold up. Okay, so let's get into some examples here. So first off, we have this example. So good morning, PP team. Leaning bullish coming into the morning. However, we do have an NWOG lower and an SMT with this buy side. Condition is this 15-minute gap. If we break it, expect the low resistance liquidity and the NWOG to get hit, the new week opening gap. If we hold it, expect price to keep trading higher. Obvious draw on liquidity right now for ES is this buy side, right? So obviously, we are in an uptrend higher, right? You guys just really need to simplify this shit. I mean, it shouldn't be this complicated. Just where does it look like price is trading towards, right? Like, it's trending higher. So it's most likely the next swing high here is your draw on liquidity, right? That's your liquidity pool, okay? Because the thing is, guys, we can have very obvious liquidity pools, and this is something that I forgot to go over, but an NDOG or NWOG, that's a liquidity pool. That's a draw on liquidity, right? That can be something that's really obvious, but if price is not telling us that we want to go there, then we do not have to take shorts towards there, right? So you need to be asking yourself, does price look like it wants to go there? Are we, for this example, are we going to be disrespecting higher time frame bullish PD arrays, and are we going to be delivering from buy side liquidity? If that is not happening, then the draw on liquidity is not there, right? We need to have everything in line for this NDOG to want to get traded towards, right? You can't just have a draw on liquidity without being delivered from buy side and without disrespecting bullish PD arrays and respecting bearish, okay? So let's see what happens. All right, so this is the chart, right? So you can expect NQ here to trade up towards this buy side, and then the condition here is what? This 15-minute gap. Condition is this 15-minute gap, right? If we break this, expect price to go towards this low resistance liquidity and expect price to go this NWOG. Okay, we can see what happens. We end up taking out this buy side liquidity, disrespecting this bullish for rally gap, respecting this bearish for rally gap, And on this day, I caught shorts down to this end dog. Okay. Pretty simple, okay? Very obvious draw, right? We also got this change state delivery on the 15-minute. A change state delivery is basically we have an up close candle here that sweeps liquidity, a body closure below the opening price of this up close candle that sweeps liquidity is going to be your change state delivery. So we go back, tap into that perfectly, deliver lower from that OB, and trade towards that end log or end dog. On this day, I believe it was an end dog, or it wasn't end log because it was a Monday. Okay, end log. Simple. Hopefully that makes sense, right? Going back, right, I was just bullish because that's where we were trending. And then from here, we have a condition. If this gets respected, let's say this got respected, right, and we start getting confirmation higher, then yeah, maybe we could have targeted maybe the recent high. Maybe we had another drawn liquidity up there. But since this got disrespected very clearly, all these periods got disrespected. Everything here, market structure shift, whatever you want to call it, just got ran through, right? This was a Drakey candle through all of this. Drakey D candle. And then we got respecting of this bearish gap. And then we got a beautiful short to this end dog. Okay. Nice. Very nice. Let's go into now the next example. Okay. So on this example, though, again, why was the market moving? Well, we were rebalancing an inefficiency, right? So the reason the market wanted to move was to rebalance inefficiency. The end dog is an inefficiency, okay? And then how was I finding my draw on liquidity? Are we delivering from sell side or buy side? Well, in this scenario, we're delivering from where? Buy side. Are we respecting or disrespecting PDRAs? Well, we are really the question would be what PDRAs are we respecting versus disrespecting? And the peers we are disrespecting is bullish, and the peers we're respecting is bearish. Okay, and that's how you found your drawn liquidity to this end log. Let's keep it going. All right, I'm gonna take a sip of water really quick. Hold up. Pause. All right, so next up we have this bias for today's day. I said neutral bias coming in the morning. I know I said you should always be leaning somewhere, but I did have a neutral bias this day, okay? It's okay to have neutral biases. And it's okay if you just wait until like 10 a.m. to see where the market truly wants to go. There's days where I'll just wait for the first 30 minutes price action play out, and then I'll take a trade. So let's get into this. All right, so I said neutral bias. We have an SMT with previous day high and a huge range from tariff news yesterday. Okay, so we have that SMT with previous day high. We have also the SMT with this daily 4-hour low right here, right? So SMTs both inside of higher time frame key levels or at higher time frame key levels. So I said, if this gets ran through, if this SMT gets ran through, expect this unfilled 15-minute gap right here because that's at EQ of the range, right? However, if we hold that, expect previous day high to get hit. So that's a condition, right? The condition can really be anything you make it. No, but it really can be though, because for this example, it's this SMT, right? So it only makes sense if we hold this SMT and we start displacing higher for previous day high to get hit. However, if we start disrespecting this SMT, then can we see this right here? So the market is moving here to either seek liquidity higher or rebalance equilibrium of the range, right? Because we had that huge impulse move up. So I would like to see price rebalance this range, right? A very strong impulse move up. We can draw it from the high to the low, or the low to the high, sorry. And there's a very strong impulse move up. EQ of the range is where we want to see price go. So short starts there if we disrespect that SMT. Now what do? Open trades lower. We disrespect this SMT, and I end up taking shorts lower down to EQ of that range after this SMT got disrespected. Make sense? Beautiful. Okay. Get into that one more time. Again, I was neutral. I said we had an SMT with previous day high, huge tariff news. So again, like neutral bias, and the really only days I'm like neutral bias is if we have SMTs on both sides, both at levels where are both at like higher time frame key levels. And here we had it at previous day high, and then also at this kind of discounted-ish 4-hour gap. So I could have seen price going both ways. And it was all really dependent on the first 30 minutes of price action if we want to displace higher or if we just want to displace lower. And then in that case, then you just look for your target lower, and then you look for your target higher. And then Bada bing, and then bada boom. Okay? Simple stuff, like clockwork. Let's get into the next thing. All right? We got 2 more after this, or 3 more. Oh, yeah, 2 more after this. Okay. So I said I was leaning bearish coming into the morning. Yes, filled an NWOG and got displacement lower. We have a bearish daily profile as well. Ooh, daily profiles. You're gonna watch that soon. Don't worry. So to continue to being bearish, I would need to see this 15-minute bearish gap hold. If we displace through it, I could see price go for London highs, then back down to London lows. Right now, just inside of this 4 a.m. range, so need to see more price action to play out to give a strong narrative where price wants to go. See you all at open. Okay, so a lot of stuff just happened here, right? So ES filled this NWOG. We got that displacement lower. Bearish daily profile. So to continue being bearish, I would need to see this bearish gap hold, right? Now, if I want to be bullish here, right? Because if we were bullish, it would kind of make sense, right? Because we would be respecting this bullish gap, and then we'd be disrespecting this bearish gap, right? So it makes sense that we would want to go higher. However, I'm leaning more bearish just because of all this, right? And for us to continue being bearish, we'd be respecting this bearish P, right? And then we have drawn liquidity lower. So the reason the market would be moving in this scenario is to seek liquidity. So the liquidity pool here is these relative equal lows that we left, okay? So right now, I just said we were inside this 4 a.m. range, so I need to see more price action play out. But yeah, okay? So that's the bias. And what did we do? At open, we tapped that 15-minute gap, and then we traded towards London lows, and I caught a banger short towards there. Now, from there, what did we also have, right? We also had a condition, okay? So similar, and this is literally just conditions, right? So if we are going to continue to being bearish here, right? I believe we also then formed an SMT here. If we were going to continue being bearish, what should price do? It should respect the PDRA here that sent us towards this London low. If we are going to be bullish, this PDRA should get disrespected. What the fuck did I just do? Okay. And what did we do? We end up disrespecting this PDRA, and you could have even caught a sexy little long towards where? Why would the market be moving in this scenario? To take out liquidity, which is a high inside of a fair value gap. This is where a lot of stop losses are resting, and that's what price ended up doing. And you could have gone both sides. Pause, but not really. Moving on. I want to make sure I'm still recording. Okay, we're good. Moving on, I said I had a bullish bias coming into the day. We are in a very clear buy model towards this weekly fair value gap. I'm not interested in the end dog as of now, being that we have not hit the higher time key level and start to see this long back there. At open, looking to see price trade lower, blah, blah, blah. Okay, so this may look like, to some of you maybe, a very obvious draw. To some of you, you may be thinking this is not an obvious draw. Whatever your thoughts are, okay, I want you to be thinking about when we first had that end dog in that one example we went over. Just because it's there doesn't mean price needs to trade towards it, right? And as you can see here, it's there, but are we showing any signs that price wants to go towards there? No, right? We are very clearly respecting bullish. Like just we're going up, right? Respecting bullish and we're going up. And where are we trending towards? This weekly fair value gap. So what would I want to see price do? Well, it looks like price is just trending higher, right? So it looks like price wants to go towards this weekly fair value gap, and then maybe then we can go towards that end dog if we start seeing displacement lower and if we start disrespecting bullish PDRs, right? But for now, I'm just bullish. Okay, I'm not interested in that. So I was at open, I was looking to see price trade lower into this 1 hour OB, then we can trade higher and get a long, simple. And look at what price does. At 9:30 open, we trade lower. We hit that bullish 1 hour fair value gap, and we run towards that weekly fair value gap. Simple stuff. I don't think we hit exactly the OB, but I still did end up taking a long just off that tap on that 1 hour. We got lower time from confirmation, and yeah, beautiful. Okay, so that's that. Very, very simple bias. Trade with the trend also, guys. Stop trying to take so many reversals. Like the majority of the time, like you just have an obvious draw on liquidity, and these are the days you want to be trading. These are the most high probability conditions where it's just like price is very obviously trending towards here. So trade with the trend. Don't try to be taking the reversal fucking 200-point dump to this end dog. Like it's most like just trade with the trend, bro. Okay. One final example here to really ingrain this in your head. And for this example, again, let's go over this. Why is the market moving here? To seek, well, really to rebalance an inefficiency, being that unfilled weekly fair value gap. And then we were, first off, I mean, we weren't really delivering from sell side here. We were just in a very clear uptrend. I'm sure that we were delivering, obviously, from sort of sell side all the way down here, probably, right? And then we were very clearly disrespecting bearish P raise and respecting bullish, okay? Now, for the final bias of the day, we have this. So I said it was bullish bias. We set up this 4-hour intermediate low inside of this gap. And we've been respecting bullish P raise and disrespecting bearish all overnight in pre-market. So depending on how we close with this 4-hour, we'll confirm my bias. If we close above this 4-hour, then what can we see? Well, we have previous day high. We have this end dog ish area here. We have higher prices like up here, right? So a lot of higher targets, okay? Now let's say we wick out London highs. We hold this 4-hour gap. Then where can I expect price to go? Most likely London lows, right? Now, again, I'm always leaning towards somewhere. So in this example, it's like I'm expecting this to get closed above. You always do want to have condition because you're not always 100% right? I'm always not the market mover. But most of the time, I am the market mover, okay? So that's just what I want you guys to know. All right, so what do? We end up closing above this 4-hour gap. And then we take a fucking gnarly long towards that daily fair value gap, right? So what was price doing here? Why would the market be moving here? Well, it's to seek liquidity. Previous day high as a very valid draw on liquidity. How do I find my draw on liquidity here? Are we delivering from sell side or buy side? Let's see. Let's take a little gander, all right? We are delivering from sell side. Are we respecting or disrespecting PD raise? Was that next question. What PD raise are we respecting versus disrespecting? Well, we are disrespecting these bearish PD raise left of us, and we are respecting these bullish, right? We are delivering from sell side. Doesn't this look like the exact same thing as? Almost the exact same thing that I drew out. Okay? We are delivering from sell side. We are disrespecting this bearish fair value gap, and then we are respecting this bullish fair value gap on the 30-minute right here. Respecting this. Okay. And then I ended up taking a very gnarly long here the next day. And that is that. Hopefully, this cleared up some stuff for you. Please ask yourself these questions. Eventually, you will not really need to be asking yourself these questions. Like, I don't really ask myself these questions, I guess, every single day. I mean, I do, like, in my head is what I'm trying to say. But yeah, right? What was I going to say? But yeah, hopefully, again, this cleared some things up about draw on liquidity for you guys. Again, don't overcomplicate it, but ask yourself these questions. Put this up on a sticky note. Put this in your journal and write out your daily bias every single morning, okay? Do this for me. Every single day, guys, write out your daily bias. Write out if-then statements. If this happens, then I will do this. And then, while you're taking your trades and taking your setups and watching the market move, take your time, okay? Don't rush it. Set yourself conditions, but be locked the fuck in on the charts, okay? And wait for price to show you what it wants to do and give yourself those conditions, all right? And if price does this, then I'll do this. And that being said, guys, hopefully you enjoyed this video. Wasn't that long a video, it was on 30 minutes. All right, so hopefully you guys enjoyed this. But yeah, again, ask yourself, rebalancing efficiencies. Are we rebalancing equilibrium or are we seeking liquidity? Are we delivering from sell side or buy side? And what PD raise are we respecting versus disrespecting? And all of this will find your draw on liquidity and your entry model. Bada bing, bada boom. See you all in the next lesson. Peace out, guys.